Hi everyone, my name is Stephen Stewart. I'm the CEO of Orefinders Resources. We are an exploration and development company focused on precious metals, and we are traded under the symbol ORX on the Toronto Venture Exchange. Today's Drill Bits episode is going to be about our March 16th news release, and what that is all about is giving our shareholders and prospective shareholders an update of where we're at in terms of a company and what we're doing over the next 12 months. As those who follow Orefinders' story, they'd know that Alex and I took over management of the company about 2 years ago, and since then we've really put a lot of work into transforming the company from a pure play exploration company into more of a development opportunity. In fact, we've got both. We've got a development opportunity with the open pit, and we've got tons of exploration potential with many targets delineated, particularly our North Zone, which was a former producing mine, and I'll talk a little bit about more of that in just a bit. So referencing our news release of March 16th, it talks about how our priority is going to be putting a updated resource calculation and a PEA on the South Zone. And what that means is we're going to be redoing our maiden resource calculation, which was published in 2013. And this updated resource calculation is going to focus on a high-grade portion of the open pit. And the corresponding PEA is going to focus on putting, or I should say, delineating independent economics about putting that pit back into production. What we're doing, one of the fundamental changes we're doing in the resource calculation is we're changing the cutoff grade. We're going to change it from what it was at 0.45, and we're going to raise it to a gram. And what we anticipate is that's going to raise our average grade significantly to the point where it's going to become hopefully very economic to toll mill our ore from the pit. And by doing that, we avoid building our own mill in the foreseeable future, and we also avoid any lengthy permitting processes involved with the tailings facility. So by toll milling our ore, which we can drive right to, and utilizing the capacity of the various mills in the area, we think we can be cash flowing in the relatively near future. And what we'll be doing with that cash flow is investing it back into the property, expanding the in-pit resources, but also exploring some of the exploration targets that we've delineated. Like I said, the North Zone. The North Zone is a different type of geology. It's more of a gold-rich VMS style deposit, and it also was a former producing mine about 40 years before the open pit produced back in the 80s. And we put a number of drill holes through the North Zone and had very rich grades over very wide intersections, but we hadn't focused on it due to capital constraints, and also because the pit, the open pit itself, and the opportunity to generate cash flow has remained our focus. So there's tremendous opportunity on the property, both from a development aspect and an exploration aspect. The news release also discusses some old drill core that we've discovered over at the MNDM's core library, and we're also going to be resampling some of our 2013 drill core, particularly on the North Zone, to do some multi-element assays, because we didn't test for base metals. And since this is a VMS deposit, we believe there's, in fact, historical drill holes indicate zinc and copper and other elements. So there's a big opportunity there. So for more details, please refer to our press release. As I said, it's March 16th, and it's available on Orefinders.ca. That's it for this episode, and there'll be more videos to come, so please stay tuned.